So let's talk about IUL for a moment. Index Universal Life. I love this product, and I'm going to give you four reasons why I love this product. One is for safety. It is an insurance product that will provide you safety. What do I mean by that? Well, it allows you to participate in the market gains when the market is favorable. For example, with the S&P 500 is an index. When it's favorable, you're able to participate in that index growth up to a certain cap. But if the bottom falls out and we begin to experience volatility, it protects you 100% from any market loss. So you have a zero floor. So if the market tanks, you lose nothing. You may not gain anything, but you lose nothing, which is quite different than having your money in the marketplace. And I'm not saying have 100% of your money in an index universal life policy. Please don't get me wrong. I'm talking about 40 to probably 50 or 60% of your total portfolio. But it is worth looking into if you are into safe money type of options in the marketplace. Secondly, liquidity. We all want to have access to our money when we need it. Obviously, with any type of financial instrument, you have to accumulate. You have to fund the instrument. You have to make sure that you have accumulated enough funds that where you can, in fact, tap into them. Once you have accumulated the funds and you're inside this IUL product, then you can access this money tax-free by way of a tax-free loan. And these loans never become due during your lifetime. Now, that's not a reason for you not to pay yourself back like you would a traditional bank. I never recommend that. It's just for you to know. But if you do take out loans against this product, it's tax free, and I would encourage you to pay yourself back with interest the way you would have paid a traditional bank back. That's the mindset or the concept around becoming your own banker. So we look at safety and liquidity. You have access to these funds, yes, even before age 59 and a half, without any type of penalty, which is completely opposite of the 401k IRAs. If you tap into an IRA 401k before 59 and a half, you get a 10% penalty, plus you have to pay the taxes on it. And another piece, the third component, is having a rate of return that is somewhat predictable. Once again, it is going to be tied to an index, whether that's the S&P 500, the Dow Jones, you name it. A lot of these companies have very balanced indices that you can link to. But what you need to understand is that your money is not in the market; it is actually moving per an index, linked to an index. So it is predictable in terms of you can kind of predict how this instrument is going to move. Obviously, none of us have a crystal ball, so we don't know. We can't tell you exactly, or we can't guarantee you. But the S&P 500 has been pretty steady to where you could actually predict to a certain degree how it's going to perform over an extended period of time. And then last but not least, we're going to look at what we call the tax advantages. The tax advantages is that your money is growing tax-free. Yes, tax-free. Not only is it growing tax-free, but after you have really got through the accumulation phase and funding this product, then you have access to it tax-free by way of a loan against your cash value in the property. And then it blossoms and it transfers wealth when you die. So, folks, I'm telling you, you have safety, liquidity, somewhat predictable rates of return inside this product, and then you have the tax advantages. If you have not researched this product, I would encourage you to do so. If you have not sat down and looked at an illustration tailored and designed for you, I would encourage you to do so, because these vehicles can in fact be life-changing for you in terms of setting up your financial portfolio for retirement, as well as acting or serving as your own banker. My job is to design it properly. And yes, they have to be designed properly by someone who has been educated and that knows how to design these for maximum optimization. And then your job is to make sure you fund it correctly. And if we both get together and do that correctly, you're going to have a safe financial vehicle that can really change your future for you in terms of accessing your money tax free, having a tax free death benefit that you can leave to your beneficiary, your loved ones, as well as teach your family how to use the family legacy bank, which would be your index universal life policy. I hope I haven't given you too much to confuse you, because folks, this is not chess. This is literally checkers. It's not as difficult as it may seem. So I would encourage you, get with myself, get with a professional that has been trained in how to properly design these products. And look at the illustration. You owe it to yourself. What will it hurt? Information is free. This information is totally free. Look at the illustration. Get an idea of what it could do for you and your family. And if it's for you, great. If it's not, then at least you've been educated on this particular product in this insurance space. So you can now say you made an educated decision to whether to go forward with it, or you made an educated decision not to go forward with it. My point is, whatever decision you make, there's only one vote here, it's yours. But whatever decision you make sure it's an educated decision. God bless you. I can't wait to speak to you about this and show you illustration and show you why I love this product and why so many of my clients have elected to put one of these products in place for their family. God bless you, and I look to hear from you soon.